Most challenge sessions fail very early. This one almost did multiple times. Let's see how it evolved. This is a clean example for a bullish entry. I am placing a buy. And now let me explain why I took this setup. Parabolic dots are below candles. Blue rune is above red. RSI is above 50. And the trigger candle is bullish with no lower wick. Be aware that I'm using Heikin Oshi candles here. So price movement is not entirely in line with the candles due to the averaging nature of Heikin Oshi. If you are new to binary options and not fully familiar with how this works yet, I also made a separate video explaining the basics in a much simpler way. The strategy settings are visible on screen if you want to follow along. For the full setup breakdown, I'll cover everything in the upcoming video. If you're interested in that, consider subscribing so you don't miss it. There is some pullback after the prior move, but the trade is still in the right direction. Let's see if price holds this level onto the final seconds. Finishes in profit. I set the new amount. It's just the beginning, of course. I look for another example. This is a similar bullish opportunity. I place the buy. I check the same things before entering. The parabolic dots are below candles. Blue rune is above red. RSI is above 50. And trigger candle has no lower wick. At first glance, RSI seems to be too high and overbought. But if you look carefully, it was around and inside the overbought range for 8 minutes. But price was still in an uptrend for this whole time. The trade is developing in the right direction so far. But this is only halfway through. After the trade is placed, I can only wait patiently. I have no control over what happens. Some pullback happens in the finishing quarter. Market can end the session at any time. The second one finishes positively too. The current strategy is not based on a trigger as most of the methods I teach do. So we can keep placing trades in the same direction until all conditions are met, and we see fit. But I have to mention that every trend reverses at some point. Previous candle had a lower wick, so it was against my rules, but this current one might work. An obvious question comes up here. How do you know when the trend is exhausted and no more trades should be taken in the same direction? Sometimes there are warning signs. One of the conditions may start failing, or a doji candle appears with a thin body and long wicks on both sides, suggesting hesitation in the market. But sometimes there are no clear early signs at all. That's why proper risk management matters much more than trying to predict every reversal perfectly. Challenge sessions can be entertaining, but in practice, managing risk is far more important than pushing the account aggressively. Some of you might wonder why I keep emphasizing risk management while these challenge sessions clearly involve extremely aggressive risk. That's a fair question. There's actually a more complicated reason behind why these sessions are made this way, and why challenge-style trading should not be confused with proper long-term account management. I'll talk about the full reality behind it in an upcoming video, because the answer is more nuanced than it might seem at first glance. The trade finished. I update the amount and look for next. This is a bearish example. I am placing a sell. I summarize the conditions this strategy tied to its bearish signal. The parabolic dots are above candles, red rune is above the blue, and RSI is quite low, around 30. And conversely to the bullish case, the trigger candle must be a bearish candle with no upper wick. This trade is getting uncomfortable. The initial pullback is taking too long. This is definitely a sign that makes me not placing more trades in this direction here after this one, even if it wins. Although at the moment, it looks like the session might end sooner than I expected. To continue the line of thought from before the previous trade ended, yes, challenge sessions can also include failed attempts, incomplete runs, or sessions that simply don't evolve into an interesting video. That's part of the reality behind this type of content, and it's one of the reasons I mentioned earlier. Let's see if the trade manages to recover or not. This was tough. I set the new amount and continue the session. Dots below, blue a rune above red. RSI is overbought for long time. I am placing a buy. This is another example which shows that RSI being overbought is not always a reliable signal on its own. No move yet in the first quarter. Not all moves develop fast. Some never even happen, and that causes the trade to fail. Still no relevant moves so far. Even a painful pullback happens. It might recover now. This trend is not an aggressive one. I set the new amount and probably remain here as there is chance the trend might continue. If the current candle closes without having a lower wick, I will continue trading this trend. I am taking the buy position. Now I need to wait patiently until the trade expires. Nice initial push. It might seem this trend will never end, but we all know trends end and even make short-term fluctuations all the time. Looks promising in the middle, but there is no certainty price won't fall down. There is some correction. Let's see if it holds or reverses and terminates the session. In this kind of trade, the last seconds are the most stressful. Trade has closed in profit. Of course, I don't know how long this trend will go, but I don't want to push it too far. I'll check a different market for now. The recent candles follow a bearish trend here. I am placing a sell. Oops, I forgot to check the payout level. It is 79% only. Not terribly wrong, but weaker than the 92% previous trades had. It's advisable to check payout regularly. Sometimes they drop down sharply. It's especially useful in a normal session with equal risk trades, since lower payout means more winning trades are needed to break even or to become profitable. While I was talking, the current trade moved down by strength. It is good to see that red rune was near top for long while blue rune weakened progressively in a calm tense. It's not a requirement, neither a reliable sign. Trading is about probabilities. And we're getting to the final seconds. The trend might continue, but I don't want to remain on an instrument with low payout, especially not in this type of video. The candles are getting stronger here. I'm taking a buy. The fact that blue rune topped only recently weakens the signal a bit. The price pulls back almost to the entry level. No real move has started yet. There is some push at the moment. The move might start now. Market is still hesitating. This might end the session. There is a third bullish push. Let's see if it holds. This was very close. These kind of trades teaches me I can never control the market. I place trades, but the market plays them out as it wants. This is an interesting example. Bullish conditions are met, but the more promising signs are the strong candles. I am entering here. First candle made an aggressive and promising start, but it's still too early in the execution. And here is the pullback after the strong move. Completely normal. Move holds nicely. Keep in mind though, that in this type of trading, direction matters more than the size of the move. This ended up as a strong move, but not all the trades play out like this. A bullish trend might establish here, but this strong start worries me a bit. It might have been the whole move. I look for next entry. In this example, the candles are varying a bit, not showing a confident trend, but the conditions for a bullish entry are met, so I follow my strategy. Blue and red lines of Arun are pushed to the extremes, which usually helps, especially when RSI is also extreme. But this is only an extra insight, not something any assumption should be based on. The move might gain some bullish momentum. Slight correction, but still in the right direction. As you see, the averaging nature of Heiken Oshi hides smaller fluctuations. Market might work through the correction. Now the trend looks better. I keep trading in this direction, but wait for the current candle to finish with no lower wick. And the trigger candle applies. The first candle makes a painful pullback. There is time to recover, but still it's harder and worrying to see such a beginning. Such strategy that does not rely on a strict signal, but multiple trade placements are allowed until certain conditions are met, might seem easier to execute first. But in reality, it's neither better or worse. It is just different. A signal-based strategy gives less entries, but following those might help avoid the overtrading pitfall that this different type can encourage. We have 2 doji candles already. Trend weakens. This is usually the phase where forcing trades becomes dangerous. The playout resulted 3 doji candles, which makes me not trust this trend anymore. I consider it exhausted, and I look for another market now. I will not come back to check if I was right or not. If a decision is made, it is safer to keep it. This trend had a weakening region too, but it seemed to recover. Conditions are met, so I place a buy. No early invalidation signs yet. We can see the red Arun declining here progressively, while blue Arun is topped. We have seen the opposite for a bearish trade earlier. This is quite common with this strategy. The other frequent case is when both lines of Arun are at the extremes. The direction still looks controlled. The third candle shows some momentum. The price seems to not move further up. Market respected the structure. I look for next. Well-established downtrend. All criteria satisfied. I have placed the sell. Nice initial push. And an uncomfortable correction afterwards. Let's see if there will be more bearish waves. I don't need any big move, just the price to be lower when timer expires. I might be late this time, since the trigger candle was very strong. Likely that was the whole move. Let's see if it holds or the session gets done. This was indeed very close to ruin the whole session. This teaches me not to follow the strategy blindly. Surrounding market context should be considered too. I will definitely look for a different market. Conditions for a bearish situation of the strategy are met, so I place the sell. Stronger than usual pullback. It seems to flip in the right direction, but momentum is weak. Still no meaningful move. This is one of the more stressful kind of trades. This is very painful to see so late in the expiration. This wasn't the most confident move either. I probably have energy for one more trade, but not more. I'm trading for almost an hour, and I prefer short sessions. A very special bullish example is forming here. I am placing the buy. All the criteria are fulfilled for a bullish entry of our strategy. But in addition, there was a stronger period of the current bullish run, which slowed down, and the body of the trigger candle is above the upper wicks of all the slowdown candles. This is a very strong, yet rare sign. First candle seems not to push price up. Now something happens. Bullish momentum appears. The trade looks promising halfway, but there is plenty of time left, and the market can have painful surprises. And this was the final trade of this session. Challenges like this can escalate very quickly when market conditions align well. But proper long-term trading is still about consistency, patience, and risk management, not risking everything in one session. I will show the strategy settings in detail in the next video. The platform is linked in the description. Thanks for watching.